Why is FAFSA confusing for parental income and assets? Have you ever looked at the free application for federal student aid and felt overwhelmed? You're not alone. Many families find the process confusing, especially when it comes to reporting parental income and assets. Let's break down why this is the case and how to navigate it smoothly. First, determining which parent or parents to report can be tricky. The rules state that you need to include income and assets from the parent who provides the most financial support or with whom the student lives. If parents are married and living together, both parents' financial details must be included. However, if parents are divorced or separated, only the parent who provides more financial support is reported. If that parent has remarried, the step-parent's financial information must also be included. This can get complicated for families with blended households or shared custody arrangements. Next, let's talk about what counts as income and assets. FAFSA requires specific information, such as adjusted gross income from tax returns, savings and checking account balances, investments, and real estate, excluding the primary home. Understanding what qualifies as an asset and how to calculate it can be confusing. For example, some assets are not counted, while others, like rental properties, must be reported. There are also special rules and exceptions that can affect whether parental assets need to be reported. If the parents' combined adjusted gross income is below a certain threshold, like $60,000, they may not need to report assets. Families receiving means-tested federal benefits, such as Medicaid or Supplemental Nutrition Assistance Program, may also have different reporting requirements. These exceptions requiring careful attention to detail. Tax filing can add another layer of complexity. FAFSA often asks for information from tax returns, and parents who file taxes jointly or separately may find it challenging to provide the correct figures. Additionally, parents living abroad or those who do not file United States taxes have different reporting requirements, which can be confusing. Lastly, the terminology used in FAFSA can be a hurdle. Terms like adjusted gross income, untaxed income, and various asset types might not be familiar to everyone. Understanding these terms and gathering the right documents can be a challenge for families who are not well-versed in financial matters. To make the process easier, families should communicate openly about who should be reported. Using tools like the Who's My FAFSA Parent wizard can clarify contributor status. Collecting tax returns and financial statements ahead of time will help ensure accurate data entry. If family situations are complex, seeking guidance from school counselors or financial aid offices can be very helpful. Navigating FAFSA's requirements for parental income and assets can be confusing, but with the right approach and preparation, families can complete the application accurately and efficiently. Understanding these details is essential for securing financial aid and making college more affordable.